Hey, welcome to another episode of Forex Tech Magazine. It's your host, Lewis. Hope you all are doing well. Today is December 19th, 2018. It is Wednesday. We are nearly out of the month. I know I keep saying it every day, but man, it is getting closer and closer to that time where we're packing it up for 2018 and looking forward to 2019, God willing. Before we get too far into this, I want to put out the disclaimer. Disclaimer goes a little something like this. Any and all information is given to you by Forex Tech Magazine. Should be considered to be for educational and entertainment purposes only. Nothing that we give to you should be considered to be financial advice. If you're in need of financial advice, our suggestion would be to seek out the assistance of a licensed professional advisor or a licensed capable advisor, rather. All right, good deal. Hold on one second. I just had my. We need to do some housekeeping here real quick. Let me check something out. Looks like something dropped. All right, we're back. Check out here. All right, should be back on. Everything should be back. Good to go. All right, so before we get into this right here, this is something new. Let's go back and look at where we were at yesterday. All right, perfect. So, as you can remember, this right here was the currency pair that we were in yesterday. We're actually on a 4-hour chart. Yeah, there we go. Oops, no, we don't. So we're on a 4-hour chart, and this right here is the Great Britain Pound Canadian dollar. So you may or may not remember this, but let's look at this how it played out, and let's talk about a little bit what went right, what went wrong, right? It's no longer here because we've hit it, but our price target was right here in the middle. I think like 1.70596 or something to that nature. And the reason why is because our original number, our original target was set back off of here, around here. Let's see. Yeah, so it's around here. All right, that's where our original target was. Oops. Something like that. Anyway, our target was in here. It was in the middle. All right. So the cool thing was, you remember this. So we looked at the first wave up, right? And then, so this was our A to our B, right? Our C was over here, right? So a couple things had to happen before we were actually able to hit this price target. One, price had to actually enter into the buy side on this particular currency pair, because if you notice right here, price is doing what? Price is moving down, right? So the first thing we had to do is get price onto the buy side. So on this first wave, when price was able to close above this downward trending line here, price moved into the buy side, right? So that lets us know, okay, now we're okay to start looking for buying opportunities in the market, right? The next thing had to happen is we had to go from, we had to go from A to B, then we had to go from our B to C, right? That move had to happen. Now, in order to go from B to C, it's also going to be a downward trend. But remember now, we're already over in the buy side, so we got the okay to start buying, but now we need a trigger for us to start to buy, right? And that was the issue. We need a trigger to start buying, right? So what happens is, or what happened was, as price starts to move down, going from B to C, creates a downward trend. So once again, we'll come over here and put a little downward trend line, and then we wait for price to cross over, which price did cross over here, right? So here, any of this time would have been a good opportunity to get into this particular market and buy. The other thing that we did is we put our stop loss here, which is below that C, right? That swing low, right? Essentially, what you can do though, and what I did is based off of some of the other previous losses, because I had like two other currency pairs that I was trading, and I put stop loss up under the C, only to find out that that wasn't the C, and that the C was a lot lower. You want to get stopped out of trade. The other thing you can do is put your stop loss under the A, and then as your C to D move takes place, right, and you actually break above the B or something of that nature, you can then move your stop loss up accordingly. Maybe back to the C or even higher, and wait as price moves up. All right. But anyway, as you can see, after price crossed over, after the price crossed over to the buy side on the C to the D move, price then made its way on up, and then this afternoon we hit our price target, right, which is really good. I think we made a total of 201 pips for a total profit of about $1,400, which is really good. And then you see after that hit, then price fell back immediately, and then it came back up again, right? And this is kind of where we're at right now with this particular pair. So that was a good trade. Remember, it was $1,400 off of that trade. It did help compensate for some losses that we took earlier in the week. Like I said, we had some that we were trading, but what we did is we had our stop losses too light. It was under the C, and unfortunately, the C we initially picked out wasn't the actual C. There was a C a little bit further down, but we had already tapped out of that particular trade. So that brings us to where we're at now. We're good. Excuse me, folks. I'm sorry. I'm a little tired here. A little tired. So we got a couple things going on. We got one going on here on the 4 hour. Oh, I'm sorry. This is the wrong one. Hold on, I don't remember that, but it looked good. I don't remember that. All right. So, all right. So this is the hour chart. And this is the one that we're using to track the Fibonacci sequence for this particular pair here, which is the Great Britain Pound US Dollar. The cool thing about this, you can see where there's been some previous Fibonacci sequences that was in place that has hit. And so what we're doing right now is just continuation of these other two Fibonacci sequences. Right? You see this is your A to B, your B to C, right? C to D, and the first one, A to B, B to C, C to D, second one, and now we're on the third one, which is your A to B, B to C, all right? And now you see where the trend line is going down, right? Price breaks through that trend line, right? And now we got our move going from C to D, right? And so it may take a while for it to get there, but that's the anticipation that it will get there. Now, the other thing that you notice here is that I actually have my stop loss below the A, which later today, got what I'm planning on bringing it up to about here as price continues to push on up. Now, at the moment, price is pushing back. It was pushing up nicely, but now it's pushing back. We're getting the open. A lot of this could have to do with the fact that I forgot about this. And that's why it's so important to look at your economic calendars. Is that there's going to be some economic information. Oh. Excuse me. Some information coming out today about the U.S. dollar. This is the FOMC. I think everybody's kind of pretty much expecting them to still um, tighten going into 2018. So, with that being said, there may be some interest in the U.S. dollar, which would then, of course, weigh kind of heavy on this particular pair. But I mean, a lot of information is already kind of baked into the cake. So what we do is just kind of wait to see what the decision is going to be. Now, also too, a lot of times what you see is you get run-ups in the opposite direction of what's going to happen after the announcement is made. So, what we could see is that actual push-up going up towards our target, and then once the information is received, then you see price then get rejected and come back in the opposite direction. So there's a lot of scenarios that could play out, but for right now, we're going to stick with the one that we got on the books. And the reason being is just because, this Fibonacci sequence is being made, and we feel that it's important that it, could possibly be some money here. We want to play it out and partake if that is the case to be, that there's money to be made. Okay. And when you trade these Fibonacci, just gonna also keep in mind that these things can be traded on any different time frames, right? It's all about just finding these sequence out there. So you just got to get used to looking for it and then, finding it and just going there and putting in your, placing your orders, man. That's it, man. It's really not that complicated at all. Alright, it's not that complicated at all, right? There's A to B, the C to D, B to C. Prices on the buy side of that downward trend. Now all of a sudden, this means that we can come in here and buy. Buying opportunity, push stop loss back here below the C or even below the A. They're so close together, right? And then with this one right here, price target is going to be here, the green. Right, and for this particular case here, let's see, it's 329 pips for that particular pair. I mean, it's no longer that amount, but that's how much it was at one point on a really good buy. But you still have a good opportunity. It's 224 pips. How much would you be risking? That is the question. Yeah, totally not worth it. You're risking 317 to get 224. So the risk to reward ratio is out of whack. Even though we think that it's going to happen, there's always a possibility that it doesn't. And what you don't want to do is be in a bad risk to reward ratio. On the other hand, we came in here, let's see what that got. It was about 329. So it's 268, 329. So it's a little bit better here. Still kind of a tight risk reward ratio, but nonetheless, still doable. And even if you wanted to bring it back to here, let's see. This is 177. Alright, I don't consider it to be a significant swing low, but it definitely is a swing because the price is making higher highs, higher lows. It's still one of those things though that you always got to ask yourself: are there better trades out there for me to take? Right? Are there better opportunities out there for me to get into the marketplace? And if there are, those are the ones you want to take. You want to put your money where it has the ability to make you the most money, and not tie it up someplace where you may or may not be able to get a return on what you put in. So, with that being said, yeah. Looks like I got another one here. Not sure what this is. Let's see. Oh, this is one I was trading the other day. Okay, I got you. Yeah, this is one of the ones that I had missed up on. This is what I was talking about earlier. So, and here's the A to B, right? It's almost like a Gartley pattern here. So this is our A to B, our B to C, and then it's supposed to be our D. But as you can see, price went up and then fell back again, and it fell back here through the blue or purplish area. So really, a new price target should be here, right? Um, which is, let's see how many pips away. It's 228 pips away from where we're at right now, and that's 84 pips. All right, so that's not bad. The only other thing would be, though, in order for you to get into this particular trade, this price would have to cross above this downward trend. Right, and the price is not willing to cross above that downward trend, I wouldn't want to get into it. Let's see if there's another one to look at. And this is where you have to kind of be careful about being subjective, right? So what you don't want to do is create something here that maybe, that may not be. And what I mean by that is this really a downward trend here? Or was a downward trend from here to here, right? Here, from here out. And in my opinion, I think that it's better to be conservative about it and err on the side of caution, right? So I much rather see price cross above this line here than cross above that previous line. And the reason being is because I feel like that it's more valid if price crosses above here and closes. Because this right here is more of a downward trend intact to me than just from here to here, right? And even if here to here was the downward trend, right, it still has to break over this line at some point in time on its way to our target, our take profit. So, in my mind, an ideal world would just be wait for it to cross over here, be conservative, and once it does, go ahead and lock it in, buy, and put your take profit on. What's up? Let's see here. There's some other ones here that might be good as well. We just came out of that one. I can get back into it. And what is this one? I had a 5-minute on somewhere. I can't remember where. This is the 1 hour one. Which is pretty cool because once again, you got the fifth sequence, right? So let's see. Yeah, this is there right here. And so this goes back to what we were talking about as far as putting your stop loss above the A, right? Because you can look right here. You know, we had a pretty tight stop loss in this particular pair right here, and we missed out. Had we placed the stop loss above the A, I think our stop loss was right about here. And then we got stopped down on the pullback, but stop loss has been above the A. As you can see, price is now making its way back towards our take profit, and could have been a profitable trade, but we got stopped out of trade too early. Thought that maybe because we're trading on a 5-minute chart that we'd hit our target a lot sooner, but time is time. It's all relative. It may just trend a little bit longer or move sideways, whatever have you, until the price target is hit. But eventually, it'll be hit. Let's jump out of here. Let's get back into what we were looking at, and then we're going to get out of here all together. Let's see here. Just want to make you aware of what's going on before we get out of here. So this is one we were just looking at, which is the Great Britain Pound US Dollar. As you can see, 2 o'clock hour, we did have a run up. The price is moving up. Now we got a pull back where price came back down. Everything's coming back down to our support line or support resistance line here, which is cool. It looks like it's holding for the moment. Don't know how long it'll continue to hold. Price could turn around. Oops. Price could turn around. If it does, then it would proceed to move down towards our stop loss. But I think for right now we're pretty good. I think we're just seeing movements in the market. I think everybody's positioning themselves, trying to figure out what's going to happen over the next couple of hours, 24 to 48 hours with the FOMC. But I think we should be okay. So we'll see. We got a stop loss in place, so we're not just trading out there. So price is going to have to move back pretty significantly for us to get pushed out of this position. In fact, the price would have to go back. Let's see where we're at. Which is pretty cool. The price would have to drop 60 pips or so before we get knocked out. $10 a pip, that's $600 that we're putting at risk. And we're looking to gain how much? We're looking to gain about 123 pips. So once again, we got about a 2-to-1 risk ratio, which is what we want to have, right? So we're risking 60 pips to get 123 pips, which is well worth it. And as long as you keep using these type ratios, you're more likely to have success over time, because like I said, all it takes is 1 or 2 wins to wipe out 3 or 4 or 5 or 6 whatever bad trades, because you're risking less than what you're trying to gain. So at any rate, that's the proper way to use the risk to reward ratio function for trading. So anyway, guys, so these are the ones that we got in place right now. Feel pretty good about it. Even though we get a little bit of a pullback right now, that's okay. Once again, we looked at our ABCD setups, and we should be good. We're going to let this play out over the next 24, 48 hours, and check back with you, or check back in here within the next 24, right, to see how everything played out. So at any rate, we're going to cut this one short today, because I am freaking tired, and we pretty much already went over everything. If you haven't got in late, just check out the go back and replay the video. You'll see everything that we already talked about. And at any rate, listen, God bless you. I will see you in about 24 more hours. Take care.